Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at volatility. We're going to look at the VIX, ticker symbol VIX. We're going to look at ticker symbol UVXY, ticker symbol TVIX, and ticker symbol XIV. Okay, these are all different ways you can trade volatility. So first up, ticker symbol VIX closed up 115% today. That was a huge move. Just a parabolic spike. RSI is currently at 91, so it's at overbought levels. You have Fasto at 94, it's overbought as well. Plus DI is way up here at 72 with this parabolic breakout. As you can see, the close today at 37 was well above that upper Bollinger Band at 24.85. On a pullback, EMA4 at 23.92 is going to be the first support level. Many times when a candle closes well above the upper Bollinger Band, the candles will work back into the bands. So this was a really big move for the VIX, and this is an historic type of move. If you look here on this monthly chart, you can see that it's above 70 right now. So the last time that it was above 70 was way back here in 2008. So it's not since the financial crisis that we have seen these levels on RSI for the VIX on the monthly chart. And then here on the Fasto, it's currently here at 95, so well above that 80 oversold levels. So this is hitting very overbought levels on VIX. That goes without being said. It is pushing well above the upper Bollinger Band, which is currently down here at 24.86. So it's currently overbought on the daily and the monthly chart. Keep in mind, this monthly chart, the candle will not set until the closing bell on the last trading day of the month. So a lot can happen between now and then. As you can see here in 2015, a long upper wick formed on a candle. You could see something like that if VIX pulled back. Notice it is breaking this red descending resistance line. This is a multi-month or multi-year downtrending line where there's making lower highs, and so if it does close above this previous close in 2015, that's going to be a signal that this previous downtrend is breaking. This is just a really big move for VIX. It just shows that volatility is back in action. If it closes above this 2015 27.88 level, that's going to be super bullish. 42.50 is the next big resistance level, and then you have the $60 level from back in 2008. If you notice here, many times when the candles close above the upper Bollinger Band, this month's candles above the upper Bollinger Band, you can see the candles work back into the bands. So this candle closed above in 2015. A red candle was followed. There's a close above for the month above the upper Bollinger Band, then a red candle followed. Same thing in 2011 when the candles got above the upper Bollinger Band, a red candle followed. Same thing in 2008. There was a close above the upper Bollinger Band here in the beginning of 2008. Here in this what is this? July, August, this August candle. But this, there was a push higher, and then that was followed by red candles that worked back into the bands. So, and then back here in 2007, when there's a close above the upper Bollinger Band, a red candle formed, worked back into the bands. So you get the picture. This is likely to work back into the bands after this month's candle. We'll just have to see what happens and see if volatility is here to stay. Many times when you get a parabolic spike like that, like this, this is the money, the easy money has been made here, and so we'll see if if it cools down. If you look here at UVXY, this is you can trade options with UVXY, so you can buy puts or calls, and as you can see today, the calls were on fire. Closed up 66%. Some of the calls returned 1,600 percent gains today, on top of the huge gains on Friday. So people are just killing it here, playing the volatility. If you look here, RSI is at 85, Fasto's at 95, so very overbought right now. Plus DI is super vertical, so it's this is a parabolic spike. As you can see, this closed well above the upper Bollinger Band as well. The upper Bollinger Band's down here at, 1680, and then you have EMA4 at 1644. That is the first support level on a pullback. If it does pull back, you want to see those levels hold. If they break, then you could see that 100-day simple moving average at 1464 tested. On Friday, it closed below that level, the gold line, and we were looking for a break above that this week. There was actually a gap up open above that level. As you can see, the lower wick on today today's candle, it pulled back early in the day and then it took off. That had sucked in some short traders that were looking for a potential move like this back here, working back into the bands. Instead, when it took off, I think it got a big short squeeze going, and that really pushed the share price to a very high level here at 20, closing at 22.87. The next key level to break to the upside is the 200-day simple moving average at 27.26. So it needs to close above that level and turn it into support to head higher. If it hits that level and fails to break, that could signal the temporary top. It looks like there could be a gap up open again tomorrow. There's a giant volume spike. So this is looking like a climax spike type of event. If you notice back here on these other big volume spikes, they were followed by red candles. Although this candle here was, this was a big green volume spike, and then more green volume bars followed. But the bottom line is this is looking very frothy, and it has a good chance of cooling down here soon. But if the 15-minute chart is bullish, this is the UVXY 15-minute chart. The signals to keep riding. As you can see today, that there was a gap up open, and then it pulled back. It looked like volatility was cooling down, but as you can see, it held that middle Bollinger Band, the dotted purple line, and that was the signal that it was still in play. And so this was the signal that when it held that, okay, because there were stocks that were bouncing in the morning, and when volatility held and those stocks started pulling back, it was similar. Okay, hey, maybe this morning was a head fake, and then volatility took off again. And so as you could see, when it closed above high close resistance, it was the closing price in the first candle of the day, was the key level to break. When that happened here at what was that, at 12:45, that signaled more upside potential, and you could see it had a huge breakout after that. So you could even have loaded on this candle if you missed the earlier move, and that was your signal that there was more upside potential. Notice how the candles were riding EMA4 the entire day. The push above the upper Bollinger Band and the close. This is super frothy. If you see EMA4 break here at 20.89, that's going to be a signal it's cooling down. The middle Bollinger Band's way down here at 16.73. That would be a big drop from current levels. As long as that level is holding, the uptrend is still intact. Okay, let's take a look at TVIX. Congrats, everybody. This closed up 68%. A lot of people that like to play the equities, have been riding this. This is 2 times VIX short-term ETN, and it made a really nice move today. A big follow through. So congrats, everyone. This did hit the 200-day simple moving average at 14.86. That is the big level to break. So it needs to close above that level to head higher. If it fails to break that level, the candles could work back into the bands. Notice that today's candle did close well above the upper Bollinger Band, which is down here at 922. 902 is the first support level on a pullback, and then you have the 100-day simple moving average at $8 is that big level to turn into support. We were looking for a break above that level today, and it gapped up open and had that big run. There was a big volume spike here, so people were locking in gains here end of day with that upper wick forming. It's going to be all about breaking that 1486 level tomorrow. So if you look at the 15-minute chart, you can see it had the exact same pattern as UVXY. These trade in unison. It came down when it held that middle Bollinger Band. It signaled that the chart was intact. This did have this really long upper wick at 3 o'clock, and then it had the big climax spike. You had the big building volume with the giant volume spike and a pullback from a high of day. So this looked like the climax spike, and especially when it was followed by the red candle. A buyer still stepped in though, and they kept pushing it higher. It was really crazy. It was like the shorts kept on trying to attack it, but every time they kept pushing it higher. So a lot of people getting caught on the wrong side of the trade, and they're getting the market makers are making them pay. It was a big day for the market makers. Huge volume on these volatility indexes, and if you are volatility ETNs. If you look here, XIV, it was down 14% today, and so this was the way to play when VIX was flat and heading down. As you can see, XIV was on this really big run between September here and all the way into the beginning of the year. It had a giant move from 72 all the way up to 145, and then bam, a lot of the gains were wiped out in just this last couple of weeks. And so you can see it broke through the 50-day simple moving average, the 100-day simple moving average on Friday. That closed below was signaling signaling more downside risk. And then today it closed below the 200-day simple moving average at 100. And so, yeah, the close below, that does signal more downside risk. There was a long upper wick that formed on this candle today off of 92.50. Notice the big volume bar. So it does look like people were loading here. You know, bounce players stepped in. The next key support level to hold is the 300-day simple moving average at 86.76. So if that is going forward above 100, is going to signal, you know, the bounce play is trying to start here, and then you'd want to see the candles work back up to EMA 4 at 113. It has to break above that level and turn it into support to head higher. If 100 turns into resistance, if you see XIV trading below 100, it could drop down there and test that 86 level. Okay, if you look at the 15-minute chart for XIV, you'll see here that it's, you know, was really driven down to very low levels today. You notice the lower wick on the actually wicks on the last few candles that formed. You know, those were accompanied with big volume bars. Obviously, bounce players were stepping in here. You know, as they were thinking that you know, VIX was topping out. You know, TVIX is topping out, VIX is topping out. You know, people are trying to, you know, time this XIV entry, and so what it needs to do is get above EMA 4 at 99.55. Once that level turns into support, you know, it could start that uptrend or get that reversal, you know, started. But in order to get a new uptrend going, it has to get above this middle Bollinger Band at 107. Notice how it tried to do that early in the day. It failed to turn that level into support and pulled back. You know, once it gets above that middle Bollinger Band like it did on the first, you know, it has to get above the moving averages. But that's the first start. So yeah, so this is you know, on the radar for XIV if you know, TVIX cools down. And then yeah, you know, so since the calls have been so hot, everybody's keeping an eye on those puts for when volatility finally cools down. But yeah, right now, you know, volatility is still in play, and you know, it pays to follow the charts. Okay, thank you for viewing this video. If you'd like to learn more about charts and technical analysis, please check out our chat. I'll post the link below the YouTube video. Thank you.